Okay, hey guys, back with another video here. This should be relatively brief. Just to follow up, I had some questions about some of the custom buttons, I guess we're going to call them here, for lack of a better term, with regards to setting these up. Now, of course, with the Auto Trader, these are the defaults that come standard. That when you trial it or if you own it, these will all be blank, right? They'll say untitled. So perhaps I went a little bit too quickly through this in the first video. So let's come back here and just review this. The majority of these are going to be in the default here. The majority of them are delta signals. They tend to be 1, 2, or 3 bar signals. So a rise, a tail, a trap, a slingshot. These are delta signals. Now, if you're unfamiliar with them, which you may well be, there's no way around this. You're going to have to go over to our website because essentially the 3 pages on the website are the manual. So all of the delta signals here, and many of these are delta signals, are going to be here: a delta rise, delta divergence, delta flip. They're simply, you're just going to have to go through them. They're not complicated, but you want to understand them before you enable them, right? It's pretty just common sense, right? So a delta drop, okay, 4 consecutive bars with decreasing delta. Now, because that's a 4 consecutive bar series here, that does not mean you need to come over here and create within the last 4 bars. The software will identify the prior 3 bars that will qualify the 4th bar for the delta drop. Same thing with a trap. Regardless of the number of bars, this is a 3-bar signal. You can still keep it to where the event bars, for lack of a better term, is what you're looking for. At the low, in this particular case here, when we get to this candle here, it's going to factor in the prior bar. So you don't need to think, oh God, if it's a 4-bar candle, then I need to make this 4 bars. No, that's not the case. And I would encourage you to do a little bit of experimenting with these. First, you have to understand what they are and look for them at pivots. That might be a way to approach that. Let me get that off for a second. And just because I use these, that certainly doesn't mean that these aren't valuable. It's just, a lot of this is just personal preference. And I will often keep, so if you'll note here, the delta signals here, okay, it's useful to maybe print out a screen capture from the website as to what the abbreviations are until they become, common sense to you. We make the effort to make them somewhat intuitive. So a D is a delta drop, O is a rise. So you're going to see a delta. A continuous POC is a C. There's an effort here to make it so they're easy to remember, but you might see that and go, oh God, D. Well, it's right on the screen. Here's delta divergence. If I wanted to have an exhaustion print, here's an exhaustion print. So again, it's relatively intuitive, but it's going to take a little bit of trial and error and practice. And looking, do I want this? Of course, you don't have to use this as an entry signal. You can put them on the chart, right? It may be a function of, okay, do I want to do custom things over here? Maybe I don't have exhaustion over here, but if I see exhaustion, well, here's exhaustion. Here's exhaustion up here. So here's an exhaustion print you're going to find these at the highs and lows. Here's an exhaustion print. I have them extended until they're tested. But I've also got a second slot imbalance here. Again, there's going to be order flow events in the majority of the bars. The question is, which one do you want to enter a trade off of? And as I was suggesting in part 1, it's worthwhile to go through and see if you can find consistent events that are happening at pivots, where of course ideally you'd want to enter after the event, the order flow event, because remember, the order flow trader is always going to enter at the close of the bar open of the next candle. In this case, because these are range bars, open and close, right? It's always going to be at the close of the bar to the open of the bar. That's where it's going to enter you, which is why, just a suggestion, right? Again, there's no one right way to do it, but my suggestion would be when you're starting out, use the range bars so you don't get put into something, that has a very, again, if you're using a minute charts, that has a very long candle. You don't want to be entering at the high necessarily, right? It may be more risk than you want. So let's just go over a couple of these. So again, these are so easy to understand. It's really a matter of just looking on the website and go, okay, what is a delta tail? Is that something that I want? Now, one thing you might do is you can come back down here and go to the vertical stripes and say, okay, I want to see all the delta tails. Okay, so show me, is that a consistent, let's see if I can find it in here. Well, here's a delta tail. All right, is that something that I would, well, here we just had this, I don't remember what happened here. There was something happened. I don't know, Trump farted or something. Who knows what? But something happened here where you can see the duration of the candles. It's 0, 0, 0, 0. Right? And Ninja can't print it. So something happened here. But I did get a delta tail here. Let's see if I got any more. Right, so you look at it and go, okay, well, over the course of the day, how many delta tails did I get? Well, it looks like not many. So that may or may not be one. Maybe that's something that's particularly unique when we get it. Let's see if I get it again over here. Here, I got another circumstance here. Well, that's at 10 o'clock, right? That's not surprising that often that'll happen at 10 o'clock if there's news or something comes out at 10 o'clock. How many delta tails did I get today? Well, okay, maybe I don't want to use that one. So same kind of thing. Maybe I go to flips and then I come over here and I go to the summary and say, well, or pardon me, the vertical stripes and say, okay, instead of delta tails, give me the delta flips. Okay, well, how many do I get? Well, there's a delta flip again. It seems to be happening where we have poor price action here, and market's moving so fast, Ninja can't keep up with it. It does happen, right? It's really nothing you can do about it. Again, I don't see a whole lot here, right? So maybe that if you were working with, I don't know, 30-second candles or 1-minute candles, you're going to see more of these. Again, I don't want to discourage you from using this. That's not my intention here. But you want to go through these and kind of pick and choose yourself. Okay, what do I see that's consistent at pivots that would encourage me to think, boy, every time I see that, the market seems to move the other direction. So now, careful of something like a delta divergence because you see it so many. It's all over the chart. So that might be the kind of thing that you would say, okay, I want delta divergence plus maybe 1 or 2 more because it's so common. Here, divergence, 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 right? Okay, that may not be enough by itself to warrant a trade, but it may be something in conjunction with other delta signals that you would want to consider in a 1, 2, or 3 bar pattern. If that event happens, so you might look up here and say, well, hey, but that pivot here as we took out the pre-market mid, divergence, divergence, divergence. Okay, maybe I do want that short there, exhaustion and divergence. Could I do that? I could do exhaustion. Oh, where's my divergence and divergence? Right, so I could do that. Oh, well, exhaustion and divergence. So okay, maybe, right? Again, there's no one right way to do it. Those are just things to look for. Now, it shouldn't be based on what I do. It's just my preference. I prefer to come over here and work with whoops. I'll come back here. Work with the custom version based on my doing exactly what I'm just describing to you, which is going through and saying, okay, what are things that I see that are very consistent at pivots? So this is a grouping that I will use. Now, one thing I should note here that currently in this version, the maximum under custom buttons, I don't know what else to call them, under the trigger events here that you're looking for to execute in a trade, right? These things have to happen for you to get for the auto trader to fire and put you into the market. The limit is 8. So we've only got 8 on one side. So I happen to take off bull pair POC and put on commitment traders because it's something I look for, and I thought that'd be a good example. So that's likely to be changed in the next version here, but currently its limit is 8. Just so you're aware of that. I didn't mention that in part 1. Okay, so let's just go through how to make these because they're really pretty simple. Let's use commitment traders because this is one that I look for a lot. So first you got to understand it. Now, if you don't understand commitment traders, I mean, here's a suggestion, right? Just go to Google, Gemma, whatever your AI is, and just type in what is the commitment traders in a footprint chart. Okay, I'll let you read this rather than read it to you. It's pretty straightforward, but you almost literally you don't need to completely understand it. What we want to look for, I'm not suggesting you don't, right? Read it, understand it, right? It's just the extremes of the delta when we make a new bar high or low. It can be confusing, but it's really not. It should be pretty simple. And you can but again, right, whatever your AI is, it'll explain it to you. whether you completely understand it or not, we can look here and say, okay, well, oh, let's see. Here's 930. Let's get a nice little run here. Okay, well, here we come into the pivot high up here. Come here. Okay, we come into the pivot high here. This is the pre-market mid. What are we? 930. We're into the market, and we get this big sell-off. Well, up at the top here, take a look at what happens in the commitment of traders highs and lows. Often what you'll see when the market starts to really accelerate, maybe it's a better example over here, is we get a little swing, we push up. It's a 21 EMA, which I just use kind of as a reference. It tends to be a bit of a magnet. Again, I'm not suggesting you need to have that on there. It's just something that I use. So if we come up here, now look down at the commitment of traders lows and highs. When the market is really accelerating, the commitment of traders will often be an extreme, as in there will be a zero on one side or the other, and the other will be very aggressive. So here, of course, it's very negative delta as we're moving down. And you'll note here that the commitment of traders, so this would have been a good, let's see if I can get an arrow here. This would have been a good example as we come here. So I've got, let's move this back. So I've got an exhaustion print, right? You're going to see them very consistently at highs. Look, exhaustion, 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 exhaustion. Something to pay attention to. Exhaustion. Exhaustion on the way up, because it's just showing you at the pivot at the end of the candle here, we have zeros, right? There's a zero there, so no more sellers. Here, no more buyers, no more buyers, no more buyers, no more buyers. Here, I've got a second slot imbalance here, which is another trigger. So in conjunction here, I've got two things here. So I've got an exhaustion print and a second slot imbalance, suggesting that there was an effort here to try and push, but got quickly rejected. I should note here, this is the same. Oh, that little dinging is going to be annoying here because the market just reopened. I have the exact same setup that I had before. It's bid ask on the left, and then a volume profile of the candle on the right. And the highlights, the colors, the blue and the yellow, those are imbalances. So I can see here that I have an exhaustion print and an imbalance. And an imbalance. Oh, I think I do have one here. But there's the imbalance here running across. Exhaustion, second slot imbalance, exhaustion. Imbalances here right in the middle of the candle, pushing lower, lower, lower. Now I've got a delta trap down here. Right? So you can see the idea. Now look at the commitment of traders high. Let's see if I can find a better example here. We come into here now. All of a sudden we got a bunch of delta events that are happening here. But look here at this pivot here. Let's get a good one. Right here. Okay, so I come back up to the 21 EMA. There's the pre-market low, right? So again, kind of things that algos, right? You want to pay attention to those. So pre-market low. So we're retesting from below, coming back up. I've got divergence. That's an exhaustion print that's running over here at 21 EMA. Now look at the commitment of traders low, 0. Then a -4. There's a little bit of an effort here, but when this starts to really accelerate, look over here. So if I bring your attention, oh, here we do it this way. Look down here, 0, 0, -31, 2, 0, 0, 0, 0. Right. So when the commitment of traders is at 0, when the low is at 0, hey, heads up. So, for example, that might be something that you would want to put into one of your custom buttons over here. So let's see how we would do that. So this, again, for those of you that are familiar with Algo Studio Pro, it's the exact same template that you're going to work with. So here for we would just add a condition here. I'm going to delete it. So you would just add that condition. If I can get it to hot here. Come here. Okay, so let's recreate it. So I'm going to go to price. I'm going to go to order flow. Right now, you have other options here that you can work with here. You can overcomplicate things here, so I might suggest you start with the order flow, and let's go down and let's find every order flow event that's available within this product is in here. So let's go down to the commitment of traders high and low. So let's go at the commitment of traders high. I want that to be, no, we're going down. So the commitment trader high is going to be 0, equals 0. You could do, yeah, let's keep it 0 just to make it simple. Equals, oops, I got to get order flow here, equals commitment traders low equals 0, right? So essentially all we're doing is saying at the current bar, if the order flow event is the commitment of traders low, I want that to equal 0 for a commitment of traders low or commitment of traders high. Right? So that's what we're trying to do here, is identify that. Now, by itself, okay, could be. Let me get rid of that. Just wanted to show you how to create one of those. So when we're down here and coming back to this nice little push down here, the commitment of traders low is 0, 0, minus 31.2, 0, 0, 0, 0. So, all of a sudden we went to a 2 here. That may not be something that would scare you out of the market. Oh, I got to get out. But if we start to turn aggressively the other direction here, look at the commitment traders low here. All of a sudden, now we're starting to get some bullish indication here. It turns out to be just a quick retrace, but then one more test down here. Here's the IB low. Interesting. What time are we at? So it's not officially set until 10:30. So we're pushing down here, setting the low. Now, as we start to accelerate, look what happens here. The commitment of traders high all goes red, zeros. Commitment of traders low, bright blue. And you'll find that often that will be in sync with what you're seeing in the delta, because the commitment of traders high and low is just it's the measure of the bid ask and the delta when the market is making either new highs or lows. Again, you don't need to memorize this. Just look at the chart. Okay, well, when the market's going up, what's the commitment of traders high? 0. When the market's going down, what's the commitment of trader low? 0. So creating a button here when commitment of traders high or low equals 0 might be an event that you would want to put into your order flow auto trader. I mean, the reason I'm emphasizing that is because it's so consistent. Look, as we're going up, look at the delta, look at the commitment of traders high, 0, 0, 0, 0, all the way. Pretty good example here, right? So can't even get it. We went so high, I can't even get it on the chart. All right, let's push it up here. Now, delta blue, right? Obviously, okay, we're looking good. Look at the commitment of traders low. It's 0, 0, 0, 0 all the way until we get here. Now we break it a little bit. Not enough to scare you out, but okay, now we're starting to change a little bit. Now we're going commitment of traders low equals 0 and high is negative 137. Again, it's just a pattern you would want to look for as the market is moving higher and lower. Let's see if I can find a good down. Where are we? 10 o'clock. Let me get this. Oh, shit. Come here. Pushing over. I'm trying to find a good down move because we had them towards the end of the day. Rotation, stuff you want to avoid. Look at the highs and lows, right? There's no continuity between it. Look at the delta. Right now we're getting into 11 o'clock, heading towards Europe's close. Little squirt here. Look at as we go up. There's nothing wrong with that. That kind of depending on the size you're trading, there's 108 ticks. But look at the consistency, right? So the commitment of traders high is at 0 when we're going up. Low is bright blue. Delta is bright blue. So I mean, you could even push these up a little, because you can reorder this to your preference. You could push these a little bit higher so that you're looking at that continuity between highs and lows, and the delta being bright blue and the zeros. That's kind of what you're looking for, because you don't have time. That's the advantage of the auto trader. You don't have time to go, okay, let's see, delta 6, commitment trader 0, volumes 28. Well, here we got into that section. Look at the bar duration. These are 0. Now here's a good one. Right, so here's a swing and a retrace to the 21 EMA. Now let's look at the commitment traders high. 0, okay, 68. Oh, do I want this? Well, I want to be entered right here. So if this committed traders high is 0, I want to be in that trade as it's climbing. We get one little pause here where there's a little indecision. So we get kind of you can look at the volume profile of that bar. It's kind of an indecision bar. And then 0, 0, 0, 0, negative, negative, negative. Now when we get that negative, look what happens at the pivot high. Well, the commitment traders has gone to negative 330, but now all of a sudden the commitment traders low has gone to 0. So those can be trigger events, and that starts this little sell-off here. And you see it change again, right? And now we go 0, 0, 0 to 146. Oh, wait a second. What's happening? Where does it get really aggressive when we're really falling? Look at all the zeros here. 0, 0, 0, 0, 0 to 245. Okay, so the market starts to we start to see absorption here. Divergence, divergence. Here's a little push. Now they flip. It's when you see the blue red, blue red, blue red. That's rotation. You like here, right? This is very hard to make money there, and easy to get spooked out of the trade. And look, we go 0, 0, 0, 0. The delta is insignificant. That when we push, look at the committed traders highs, zeros all the way across until we get here. That whoa, heads up. All of a sudden we went. Now look at the flip from commitment traders high to commitment traders low. We go from 0 to 0. Enough to pull you out of the trade? Well, it might be enough to tighten a stop. Just one example. I'm not trying to overemphasize commitment traders. It's just a good one because it stands out so much, and it's so consistent when you're looking at the delta, right? Because it's a reflection, it's a derivative of the delta. So that might be the kind of thing that you look for. Again, there's no right ordering here. It's just whatever is most appealing to your eye. Some people just put delta and volume and delta signals, commitment trader. It's whatever you want, right? Again, there's no right answer. There's so many features in this product. It's really a matter of editing it down to what's most important to you. And there's no particular magic in a 40 range. It's just what I prefer. Or if I'm trading the MNQ, which the majority of you are trading, right? It's the most traded futures contract of any futures contract. So the majority of you are trading it. It moves. It's volatile, right? That's a double-edged sword. But it's particularly effective with the auto trader because it's moving so fast. And that's the advantage of this. Again, as I said in the first part, very hard for you. Some of the duration of these bars are very, very short. It's extremely difficult. It would take a lot of screen time to get to where you can read it that quickly, particularly when the market's really moving. So that's why I think this can be very advantageous to NQ traders that are either working with footprint or trying to get into working with footprint, because you're getting insight into what's happening intra-candle, right, that you can't do with a candlestick. Again, look for that correlation between delta and the very low numbers on the commitment traders highs and lows. That can be really effective way. Here, now rotation, right? Blue, red, blue, red, blue, red, blue, red. Rotation. Well, we're getting into the end of the day here. All right, so I thought that would be helpful here. I hope it is. Just a reminder. So only 8 here. So you got to pick what's most important to you. You will find, again, as I said in the first one, anything that's available over here is right here. It's all of these order flow events. If I wanted to make something that would put me into the market on exhaustion prints, well, I would go over here and create an exhaustion print. Right? I would just create it here. I'd go to the condition. I'd go to order flow. I'd go to, okay, find my exhaustion prints. Oh, here I won't make it. It's a little trick. It takes a minute to find them. But that's here's exhaustion print. So give me a bullish or a bearish exhaustion print. They're very common. So that might be the kind of thing, well, oh, is 2 enough? Maybe I want 3. Maybe I want exhaustion. So here's an example. Maybe I want an exhaustion print, a second slot imbalance, and a commitment of traders low equal to 0. You can put you in that trade. Well, now it's almost a close, right? Do you want that trade? But no, look how consistent the exhaustion prints are, right? No, that might be, okay, do I want that? I want that, plus I want 1 or 2 more. I'd suggest 2 more, right? They're so common. Same thing with divergence. It's so common, I'd want at least 2 more. Some suggestions. Okay, I hope that helps. There's a lot of people. Oh, one other thing that this will happen to you if you're not careful. If you're in a trade that the auto trader has put you in, and for whatever reason you decide you want to close it early, if you click close, be sure that long and short are not still enabled, because if you close it early because of something you see or whatever, if it's still armed, when you close it here, if it still qualifies, it'll put you into another trade. Be careful with that. I've had that happen to me as well. Same thing here. If you close it up here, what that's going to do is disable the strategy. So you'll have to re-enable it. Careful of that, right? But if you're in a trade here, my suggestion would be disable, because it's set to continuous. So again, if you close it here, if it still qualifies, it can put you into a short or a long immediately. So if you close it here, make sure these are turned off, or you might end up with something you didn't want. Just a friendly suggestion, because I've done it myself. Okay, with that, I'll wrap it there. Oh God, this was going to be shorter, but okay, there we go. All right, guys, hope that helps.